Hello traders, I'm Romy Silva from realMONEYfx. Well, we are bringing the secret of trading into light. If you're watching us for the first time, please like our channel, subscribe, and turn on the notification bell so as to be updated whenever we drop a content right here. Also note that every information released in this channel is for educational purpose. Make sure be be sure to be aware of the risk that is involved in trading the financial market before venturing trading it with your live money. Okay, without wasting any more time, let's get started. Okay, in today's video, I'm going to show you how I trade my boom and crash using just Fibonacci retracement and extension. No other uh, indicator is required. No other technical analysis is required. With just your Fibonacci retracement and extension, I'll show you how you can trade this market, the boom and crash market, even the volatility, and how you can become successful in each trade that you pick. What I'll do for you in this video is that I'm going to pick one of those tools and I'll show you how to use just this Fibonacci retracement right here. I'll show you how to use this one tool in either way, either as an extension or as a retracement. So you can use only these two, only this one tool right here. You don't need to learn the other one, the extension. That after picking this one to draw, you pick the other one to for your TP zones. So right here is our Fibonacci retracement. As you can see, it has ratios, it has numbers. Like I said, I would not go into detail about the Fibonacci, but I'll just point out few key ratio that I will be using that I use to trade. Okay, so the ratio is range from 0 to 100 right here, and even to 160, 220 something right there. So, but right now, how do I trade with Fibonacci retracement? Okay, before you can incorporate the Fibonacci retracement, you want to have a major trend so that when you use your Fib, you can have a very good risk to reward market, which you can have maybe 1:10 or 1:5 as a very good risk to reward market. So right here, let me show you how to use the Fibonacci retracement, and also how to use that same retracement and turn it to an extension. So look at it right here. If Let me delete this one off. Let me pick it again from here. Alright, so I'm going to, this is a downtrend from up to down right here. This is a downtrend. Okay, since this is a downtrend, okay, I have to draw it from up to down so as to have my retracement. I want to see where this market will retrace to, okay, so that I can join. This is a trend. Maybe I lose this trend from here. I wasn't aware of the trend, so I couldn't join the trend from the very start. Now, what I will do is I have to wait for a pullback to happen in the market. That is when you have swings, okay, in the market. So you join the market in a pullback if you lose the main trend. So right here, this is a major trend right here. It has swings highs and swing lows. So this is a trend. Now I want to join this market. How do I join this market? I want to see where the other traders um, will give me a chance, or will allow me to join the market. I want to see where some of them will take their profit, and I want to see where other um, traders who want to join the market that happens at the pullback. Okay, so this is a major trend right here coming down to this point. Now the Fibonacci has key ratios from 0 to 100, and the ratio which are very important for our entry levels are the major and the most important ones are the 50% retracement ratio or the 61.8 retracement ratio, which is right here and here. So let me explain why that is so important, why you have to use those two for your entry or for your yeah. So the reason is this: from the top from the top of this trend down here, okay, many traders have been selling from here to this very point. Some of them feel okay, they want to take their profit, they are done selling. Some of them, okay, so let me start buying, so let me start leaving the market so that I can take my profit. So the process of the traders taking their profit is where you will have this pullback, because the number the strength of the sellers are reducing. Now they are beginning to buy the market. So instead of the trend to continue down, it has to go back because they are now buying to take their profit. So you have this retracement. Now there are major retracement and there are minor retracement. In a trend, the 38.2 percent of the Fibonacci ratio is a minor retracement, which is not advisable for you to trade because that will not give you a good risk to reward. Okay, so the 38.2 ratio of the Fibonacci is a minor retracement, but you want to have a full retracement that you know that okay, at least 50% of the sellers or the buyers are taking their profit. So now we're going to have a fresh buyer or sellers in the market so that the trend will continue. Okay, so now if you join this trade right here, if you allow it to retrace up to 38.2 and you join, this is a minor retracement. It is not advisable to trade because the trade will bounce back just as it happens right here. It will bounce back and to hit the proper retracement zone. Okay, so we trade. I personally, and I believe an average Fibonacci trader trades either the 50% or the 61.8% Fibonacci retracement ratio. But um, the main ratio, the main percentage of trading, a good trader, a good Fibonacci trader will always trade the 61.8%. Why? Because even if you enter your trade at the 50% retracement, your stop loss is going to be above the 61.8%, the middle of 61.8 and the 72.8%. Now, if this happens, if you enter a trade from the 50% retracement and you place your stop loss at the 61 point at the center of 61 to 72.8%, the risk there is so high, your stop there is so high, so you may not want to risk that, because if eventually the trade bounce back, it's going to take a whole lot from you. So probably the 50% retracement of the Fibonacci retracement at times is also um, not considerate because of the risk to reward that is involved. So most trader takes this 61.8% because the stop loss is going to be at the middle or somewhere higher than the middle of between the 61 and the 68 and the 72.1%. So our stop is going to be somewhere here. If you take, even if you take from 38.2, you keep your stop here, which is a very high risk and if you're taking 50 and you keep your stock here, it's also a very high risk compared to you taking a trade from the 61.8 right here, from the 61.8 right here, and you are keeping your stop lost just at the middle, at the center of the 61.8 or the 72.8. This is a very good risk to reward ratio. So these two ratio, the 50 and the 61.8%, is a major pullback. You will want to trade the 50 or the 61.8%. There are some aggressive traders that whenever in, that after carrying out their setups, what they lack at times is what confirmation, or even if they have a confirmation, what they would lack is what a reaction. Even when after your trade has um, um, pulled back to the 61.8, it is not advisable for you to just jump into the trade. You must wait for a reaction, and the reaction is that you will not take the trade just at this line here. You have to see that um, it reacts above the 61.8 into the 50.8, the middle of the 61 and the 50.8. So your entry level should be right here at the middle between the 61 and the 50 and the 50%. And if you are taking a trade from the 50%, you are not to take it from the exact position. You take it just above the 50%, coming to the 38.8. That shows you that there is enough momentum to pull your trade to your direction. Okay, and also one thing I forgot to tell you is that the this key ratio, the 61.8, the 50.8, the 38.2, these are all the point of support and resistance. So you can now see the power of the Fibonacci retracement. This is a point of support and resistance. So if you do not know how to draw or where to draw a point of support and resistance, Fibonacci helps you locate those points. Okay, this is your support and resistance. This is your support and or resistance zone. So Fib helps you to do that for you. Now, that is for extension. That is for retracement. So the keyword right here is that you will always want to join a trade whenever you have a retracement using your Fibonacci ratio to calculate it. You may want to take a trade that is 61.8% retracement. This is a safe trade for you to take. Now let me point out this. If peradventure you are waiting for a retracement and it retraces over the 61.8 heading to the 72.8, then hit the 72.8, please. I will tell you this is no more a retracement but a reversal, so you may not want to enter it as a continuation of the former trend, but you will look for an opportunity to trade it as a reversal trade. Okay, all right. I don't have much time to explain so many things right here, but trust me, I'll be doing videos on reversal and continuation, so on and so forth. So there'll be lots of video right here in this channel. That's why you need to subscribe and like the channel, ring the bell so that you'll be notified whenever a content is being dropped right here. So that is for that is for a retracement. Fibonacci retracement is used to enter to place a trade. Now let me show you how to use Fib to determine where you can take your profit. It has several level of taking profit. You have your TP1, your TP2, your TP3, and so on and so forth. So Fibonacci helps you to locate those points as well. Now, how can you use the retracement to use it as an extension, the same tool? So what you need to do is, if you are having a downtrend, just as in this case, from the top down, from the top up here to the down here is a downtrend. And for you to have your retracement, you have to pull, you have to use, you have to use the fib, excuse me, you have to use the fib right here. Probably let me take this off and show it to you. So you have to pick your fib to determine your retracement ratio. If it is a downtrend, you place it from the top of the trend to the last swing, the last low of the trend, to have your retracement ratios. Now, if you want your extension, okay, let's say in this trade right now, we want to join this trade. We just put in our indicator, our Fibonacci retracement, and it gives us our key levels. Let's say it marks our level here 61.8, and we want to join the trade right here. So you you keep you mark this point right here. This will be your entry point, but it might not really be, because you need to allow it to react above that line. But to demonstrate what I'm trying to say right here, this should be your entry point, and right here at the middle of the 72 and the 61.8, right here should be your stop. Okay, I think I should just do a text to that. I should just do a text to that. Right here will be your stop. Right here will be your stop. Okay. Okay, let me do that again. um right here, right here will be your stop. Right here will be your stop, and here here is your entry. Here is your entry. I'll change the color to green. Here is your entry. I'll just indicate it as ENT. Here is your entry, and here is your stop. Okay, so this is what the retracement gives you. Right here is your stop loss, and at the line at the 61.8 point ratio is your entry. Okay, so now let's, where are we taking profit? Where should we leave the market, since we have where to enter from? So where are we leaving the market? So that is where you need the Fibonacci extension. Like I said, I'll show you how to use the same retracement, the Fibonacci retracement, as your Fibonacci extension. All you need to do is just to use it the other way around. Since it is a downtrend and you have marked your point from the top to the low right here, so you pick that same tools, then instead of putting it from up here down here, because you are looking for an extension, you have to go the other way around. So you place it from the down and drag it all the way to the top right here. Okay, so this is our extension. This is our Fibonacci extension. Now this shows us where to place our TP. Please don't neglect this 86.7%. I know most of you will want to take 100% TP, like win rate. You want to win 100%. Please don't neglect this 86.7. Is a very strong, very strong point. At times it may cut here and it will bounce back, and if it bounce back and you feel okay, it's still gonna go down, at times you may just have to kiss your profit goodbye, because it may not retrace 100%. But thank God for this particular um, commodity right here, the retracement was over 100%. So right here, this will be your first TP zone. The 86.7 should be your first TP zone. So I'm going to target TP1 right here, will be your first TP zone. Okay, right here will be your first TP zone. I'll change it to yellow, change the color to yellow. Okay, and I'll target TP1, TP1 right here. Okay, then um, the 100% will be your TP2. Your TP2 is the 100% retracement, or the 100% continuation. Okay, this is 100% continuation, but the other way around is say a retracement, because right here it retraces back 100%, because from right here to here was the retracement, and it also retraces back up to this point, 100% retracement. But for this, I'll say it is 100% continuation. So I'll still write it as what, TP2. I'll tag it as TP2 right here. Okay, call it TP2 right here. And there's another thing you can do. You may have up to 3 TP. So after 100%, we have another ratio which I did not set this to be, which is the 126. 126. So that should be your TP3. But always make sure, if you have to leave it up to TP1, TP2, TP3, you must have known that it will surely get there. Otherwise, you have to kiss the ones you have made, the profit you have made. You have to kiss them goodbye if you did not trail your stop. Alright, so that is how to use Fibonacci retracement, and also use it as an extension. Remember, the retracement gives you an entry level and a stop loss level, while the extension um, gives you a way to leave the market. That is your TP zone, your TP1, and your TP2. As you can see, if you capture this move right here and you pull out your tool, and from up here down here you put it, and you have this move up to 61.8%, then you enter your trade. Then this is where you should leave the market. You take your first TP, and if it still continues, your second TP, I believe this should be 126, 126% retracement, which is a very profitable trade for you to take. So that is the power of Fibonacci extension and Fibonacci retracement. You don't need any other analysis. You don't need any technical analysis. You don't need any indicator. Just the Fibonacci, understanding where to put it, which ratio to pick as your entry level, as your major pullback. Then you can be successful in every trade you take. Please make sure that you do not take this directly into your live account. Do this, practice this on your own. Pull it out in all the charts, measure the levels, backtest them, be comfortable, be convinced that you are very good in using it before you now incorporate it into your live trading account. Like I said, if you are watching us for the very first time, please like realMONEYfx, subscribe to the channel, and ring the bell, and you'll be notified in every single content that we post. I can assure you right here that the content you'll be receiving right here is going to be one in town. All right, it's going to be a very educative and helpful to you. If you have any question to ask, you can leave the comment below. You can leave your comment, write your comment, ask questions. Okay, ask questions. If you want to be part of Real Money FX team or Real Money FX, we have a Telegram channel which we run a live trade analysis, which will give a live signal and so many things. If you want to be tutored, you can as well comment, write to us, send an email to realmoneyfx@gmail.com. Then you can write your comment, or you can visit us on our Telegram page where we can talk and we serve you in any way that you want. Thank you very much for watching this video. Till I come your way again next time, I remain Romy Silva from Real Money FX.